That's right. So, guys, happy new week. Happy Sunday. I've been expecting this market to open up um, because it's been a lot of things brewing up. First and foremost, we are still in a government shutdown. And in a couple days, snaps, snaps benefit will be ending. All right. So, snap benefit, for those who don't know, is just basically the program that was designed for kids, adults, or older individuals, right? And those who are not able to work because of disabilities. Okay. Now, some people also benefit, families of lower income. They usually use the EBT card, which is like, which has been helpful towards.
Yes, that's what I did.
Oh, snap.
It's the same thing.
Oh, snap. Okay. All right. Which has been helpful in gathering just the funds to get groceries for the households that are not working enough wages to make ends meet. And let's be honest, this is not just like a boo-hoo story. This is the reality of millions of Americans. So now imagine this. We have a government shutdown, which so far is on record to be the longest shutdown in American history. Wow, we're making history here. And on top of that, in the first 2, 3 months of the year, there's been so many laid off um, jobs, all because of DEI. Then we had the market crash in April. Then the market recovered. It's been a shit show roller coaster. Market dropped again a few weeks ago. And on top of that, credit card, late fees, uh, those indexes are at an all-time high right now. Like things are getting bad. So you ask yourself, what's the worst that can happen from here? How possibly worse can it get? Well, we still here, aren't we? We'll find out. So, because of all these things, we also have tariffs and a lot of uncertainties that are not helping um, with the fundamentals. And despite all of that, you would think the market for these particular stocks would slow down. No, they're not, which is why a lot of times I get reached out to and people are like, hey, why is it that US 30 is still bullish when the economy is not doing so well? Well, it's because these companies are, as we said months and months ago, these companies are firing humans, but hiring AI. And they're still racking in great profits, which is now becoming um very dissociated from what's really going on in the economy. All right. So now when it comes to gold, we're going to come back to US 30. Don't worry. When it comes to gold, because of all this uncertainty and the government shutdown and China still investing in gold, we have different central banks that are investing in gold. Um, it's being used at the safe haven that it is. All right. But we have to be careful every single week, even though we have expectations. Last week, you guys were able to catch about 1,500 pips alongside me because we noticed that the market would have this reoccurring pattern where on Sundays, um, it will start to rally. But there are conditions in how price rallies. We have the previous week lows starting from Friday. And then we have London session. Sometimes it comes back to retest the Asia lows in the middle of the night for those of us who are living in the Western Hemisphere. So last week, when we were on the webinar, we still took buys, but we wanted our stop loss to be very much below Friday's lows to be safe.
Mhm.
And because of that, We got to see price come back to the London lows. Price came back to the London lows. Some people got stopped out, but even during the New York session, we saw price did buy. And when it pulled back a little bit, we still were able to get in around 10:30 because in New York on a Monday and throughout many times of these sessions, you can notice that like around 10:30 is a good retracement point if price is bullish still. All right. So then we were able to catch this. Now, let me segue into saying this. A lot of times I've noticed that many of you guys are really good at technical analysis. Like you can mark up a chart, like you could cook up, you know, mama's best cooking, grandma's best recipe. But when it comes to entry, managing the trade, making decisions, choosing the right risk and lot size, it's a little iffy. Am I correct in what I'm saying? Do you guys feel like you still need a little bit more assistance in choosing lot sizes? Because that is super important, super, super important. And I can't blame you when the markets change and you have to now look at 300 pip stop loss. I wouldn't be surprised if you're struggling to figure out what risk to take. All right. Out of 15 people here, is anybody having issues with choosing the right risk or lot size when trading gold or trading in these conditions? Thank you for being honest, C's. I appreciate that. You're the only one out of 15 people who's struggling with that. So, hey, bro, you're a legend. Okay. So, um, I want to let you guys know I too had to readjust and recalculate my choice of risk because I never really traded in a market where I had to put 300 pip stop loss expecting 600 to 1,000 pip TP. Because every time I kept starting with this, I'm like, okay, well, let's just start with $1. If I put $1 trade, 0.10, and I have to put 300 pip stop loss, dang, if the stop loss hits, that's $300. In a small account, that doesn't sound too sexy. So let's say you have a $20,000 account and you have to put one lot per usual. You got really used to a one lot. Now you're not too comfortable risking $3,000 on a one lot. So some of us get stuck trying to figure out what lot size to use. Well, if you're going by, let's say, the traditional 1%, you always have to do the math to what you are comfortable with. With a small account, you always got to start out with something you're comfortable with. Let's say you had to risk $30 on a trade that's from an account that has $300. We all know 0.01 is more than comfortable to use on an account that has $300 to $500 to $600. Right? A 0.01. But the plus side right now to these markets is it can move 1,000 pips, which means even with a $300 account, a $500 account, a $20,000 account, you can make $100 with a 0.01. And that's still a 20% or, what is it? 300. 10% is 30. We're talking over 50% gains with just a 0.01, right? Let's do this. Let's do the math. 100 divided by 300 times 100% is 33%, right? That's a 30% gain off of one position. If your account and your risk tolerance can only afford one position, then so be it. But just make sure that the distance you're choosing makes sense structure wise. All right. So now on an account that has like $10,000, Let's say you want to risk $500 on your first trade, knowing that the stop loss is below London's low or below last week's low. You got to still do $500 divided by 300 pips. Then you can use $1.60. Now, $1.60 might sound peasant like, but when you're dealing with a market where 1,000 pips, 700 pips is your potential TP, 12 hours later, 6, 7 hours later, then that changes the game. For on average, people used to just be going 50 pip stop loss, 100 pip TP, 100 pip stop loss, 200 pip TP. Now it's 300 pip stop loss, 1,000 pip TP. This changes everything. You could literally make 1.6K off of a trade where you're risking um $500. That's still a 1 to 2. You could end up making 3 grand off 2 positions of 1.6 and another added position of 1.6, right? 0.16. So this is how you go about choosing your risk accordingly in whatever market condition. Does that make sense, guys? So I wanted to just break that down for you guys because I know I'm always thinking on your behalf, even if you don't have those type of questions lined up. I can imagine this would bring some clarity. Okay. So it always starts with what you're comfortable risking. All right, we start with the percentages, but then we really just bump it up to dollar amount. Right? If you add more risk, obviously you're doubling the risk. But if you scale up to the lot size too, that's even better. Because you didn't have to use $1.60. You could have still used $1.60 divided by 3 positions as you get more comfortable scaling. You could use 0.05 right now. Up to 3 positions of 0.05 is still going to earn you some good money with the right risk and understanding structure for that pair. In this case, gold. All right. Now, I know some of you guys trade futures, so that might not be useful to you, but we're just talking about risk in general. So we are in a new week, and as of last week, I remember seeing the market on a 4-hour time frame. After we failed to break above that 4-hour structure here last Monday, we saw a nasty drop of over 3,000 pips. That was crazy. I didn't expect it to be this case. But once we noticed that price made it to the 4-hour high and couldn't go above it, that alerted me a little bit because I did not want us to take a nasty, nasty loss. And truth be told, sometimes you guys got to understand too, in unprecedented market conditions, you have to have this huddle with yourself. You gotta be like, yo, if ever the market drops over 600 pips and I'm in some positions and I didn't have stop loss, I need to say to myself, hey, if I see, let's say, I don't know, $1,000 in floating drawdown, I need to get out. I don't need to have no hopes it's going to pull back up. I need to get out with the loss that seems to still be manageable because it can be a lot worse from here. I've had to really kill this high hopes mentality when trading in these markets right now because what you think is bad could be worse. Might as well just close while you have the chance. You'll have a lot more opportunities to come back the less the loss is. Okay. We've talked about this before. It's just a repetitive lesson for us to know that, hey, these are still things that people are battling with, things that we need to do better about when the market opens. All right. Now, Um, Thursday, Wednesday, Thursday, we saw the market bounce off this area, 4,000. And Thursday, we actually bought from this area. We pulled back here and still respected Wednesday's low on Friday, and that was in London. And then in New York, there was news. We we actually saw core CPI last week on Friday. The numbers came out. The numbers did not look good. Right. So they were anticipating 0.3. It's worse than 0.3. It's 0.2. So this number kind of helped to confirm that this week when Jerome Powell speaks, there ain't no way we're not going to see another Fed rate cut. Ain't no way we're not going to see another interest rate cut. So, yes, I know today is the day where we start to look at gold and potentially seeing opportunities. Ain't nothing wrong with that. But know that this week we'll have other opportunities if we stay patient. Now, the way the structure is looking like, I still don't see it selling, but we have Friday lows right here, 4,052, even 4,045. And the way price pulled back within this imbalance, I think we still gonna respect this demand. So, what time is it? 7:21 p.m. We have all Asia and London to see if price is gonna respect this low. If it does, we're gonna buy. But if price, for example, in London sells and breaks below that, chances are we could go and retest below 3880. Shoot, even 3800. We never know. So I'm not too keen on jumping in buys just yet. I'd rather see price come back and retest Asia and London for me to see if this structure will be held. That's how I'm feeling. Okay. Because if I see a break and retest, then that's going to further solidify that. All right. They're still somehow keeping gold bullish. But right now, I don't have that confirmation just yet. That confirmation will be revealed to us as the hours unfold. Okay, guys? So I'm just gonna keep an eye on this area here, at least by midnight. I'm not gonna sit here glued to the laptop, but I'm just gonna make sure I'm paying attention to how structure is behaving in the beginning of the week, and then we'll see. All right. Now let's take a quick look at what's going on for the week. I know we have FOMC, but what else do we have? I was in a buy since last week. Last week when, fam? And what price? 108. Oh, 4,108 is what he means. So that way there's no confusion. Okay, 4,108. All right. Hopefully you're managing this trade wisely. If things break, don't hold unnecessary too long. All right. Okay. So that's basically the outlook for gold. We're not getting into any trades yet. We're going to let price give us some more price action just so we can make a decision. All right. So what does this say? Gold braces for turbulence ahead of central bank geopolitical triggers. Okay. Let me click on that real quick. Conventional be lower. Yeah. So I wouldn't be surprised if, like, let's say we start the week bearish or whatever. And once we have FOMC, I want to see by like Thursday, Friday, what price is gonna do because I want to see like if price is gonna go lower by any chance, because of news or whatever the case is. All right. And another thing is this: if at some point in London price can't even break above this high, then I'm not gonna have a bullish bias. Because if you can't break past last week's highs, yeah, ain't no need to be holding on to um buys. Okay. Can you guys hear me well?
Yes.
Okay, good. So that's how I'm seeing gold for the moment. Moving on. Last week and the week before that, we caught gold selling to this area and retesting the previous Friday low. Like on Friday the 17th, price was testing Friday the 10th lows on a 4-hour time frame. What does that mean? That means whenever price does retest 4-hour lows, it's very strong, and the likeliness is that it might buy. Especially since that week, the previous week, price started off just like losing steam, and every time it looked like it would find a demand zone, it just sold even more. So we needed to ask ourselves, where is it selling to? And it found the 4-hour low, which 45,400 was a strong area of demand. So of course, price bought, and the next week after that, we saw price retrace. And again, in the middle of the week, Wednesday to Thursday, they found themselves this area of demand. Now, going down into the 1 hour, we noticed by Thursday, price was actually scaling. I remember when we called this buy, when I went live with you guys, we called this buy right here by around 10:40. Remember, guys? Who caught that trade? Okay. We saw a couple people caught that trade. Good, good, good. Now, the thing about this trade is it took a little while, but then it played out by 2 p.m. just like we expected in the same way I called it on the Telegram. However, um, not only did it play out on Thursday, this break and retest, even though price was consolidating, this trade 24 hours later was out of there. Okay. So with the help of fundamentals, price went even further. So now we're into a new week. You're probably still asking yourself, man, how could I had held this position? Truth be told, it's the same thing we were talking about with gold. It's all about having a plan. And within the plan comes risk management. Sometimes it be them very moderate, calm lot sizes or position sizes that we put on a Thursday after price done already created a higher low that you could hold on to and say, hey, I'm willing to see what happens with the market by Friday afternoon. The worst that could happen is the calculated risk stop loss gets hit, you know? So that's how you could have held a position like that. I'm sick and tired of sometimes having conversations when I peep that the trader is more so focused on how they could have made this money, but they never had the plan to hold, and they don't usually hold positions to begin with. I need you guys to avoid saying, talking about profits that you could have made when that's not even your style anyway to hold certain positions. Like you're lying to yourself, you know? Like in the beginning of this year, I said I wanted to grow as a trader and hold some positions a little longer. I wanted to transition into swing trading. And I can say at this point, I've gotten to a point where I've held trades for 2, 3 weeks, something I've never done before in my 10 years of trading. Never. Like when I say never, never. Right. So that's a big milestone for me. And I had to literally re um I had to literally like relearn certain ways of holding positions and choosing the risk just to be able to sleep well at night. I'm like, hey, listen, I'm in this trade. I see profit. I see it come back. I see profit. But I'm like, damn, this is a trade that no matter what, I'm prepared to lose what I planned to risk because this is a trade I'm supposed to hold for the next couple of days. But in any case, things are starting to look worse than it should. That's a trade I'm gonna have to close. And I'm saying this in reference with gold. I know some of us um throughout the week last week because we had planned to maybe catch a long-term swing position with gold. And when the market made it to 4-hour highs, some of y'all was still hopeful that things will turn around. And I'm like, nah, let's close positions for now. But the problem is sometimes as traders, the hopefulness that we have will have us staying in trades we have no business still being in. And it doesn't have to be the case. You know, today I highlighted something that went on between Sai and Ali trades. I noticed for like the past 2 weeks, one of them was in BTC buys, and one of them was in Solana sells. Now, Sai was celebrating this trade while it was obviously in profit of like somewhere around 8 million or something like that. And as I looked at the trade, I'm like, okay, this is great. This is dope. But it reminded me of something that happened to me back in July. We will see 4-hour structure selling and we'll be like, all right, cool. Like it's going to keep going lower, high, lower, low. But at some point, when the market starts to like just have trouble breaking the demand low or the 4-hour low, you got to bail. You got to leave that trade where it's at because these areas, they're strong areas of rejection for a reason. And whenever price can't break through a low, it'll go back to where it came from. Whenever price can't break a high, it'll go back to where it came from. That started all this rally. You see that? When price sweeps a high, it goes back to where it came from, the point of origination. And sometimes when you pull the measuring uh ruler, you're like, damn, it came back to where it came from. It only took 7 days though. Ah, I knew it was gonna go back to where it came from. But yeah, but you only held for one day. So sometimes you gotta really understand what you're signing up for. Gotta understand what you're signing up for. So, boom, long story short, Sai lost that trade, which is cool. No matter how much it was, he believed in what he thought was going to happen. And uh Ali, Ali just closed out on his $40,000 trade. And it's because I've been saying this to you guys as well. When you're looking at Bitcoin lately, 100,000 is a very significant number because that's where a lot of institutions are. So every time price will go low, sure, it has the potential to touch 97K, but that's not a risk you really want to take, especially when there are sharks and whales all around 100K. So luckily, as many times that I was looking at this trade, I'm like, bro, this structure looks ugly. Sunday, October 19th. I'm like, damn, this looks like it could create a lower high and sell off, but okay, let's see. Then price bought Tuesday. I'm like, oh, okay. This man might be lucky after all. Price sells again. And it's just been a back and forth, but somehow, because of all this money that's sitting around 100K. The hedge funds, big operations are still kind of keeping Bitcoin around that level. Price was able to buy back to 114. I said personally, I would have just bailed at 114.5 because price kept on rejecting here. And here we are at 114. All right. So I say all that to say you got to understand the dynamic of what you trade so that way the decisions you make can make sense. All right. So if you're not trading a pair that you know very well, you're gonna learn lessons from that pair that you learn for the first time, and then that lesson is going to teach you how to trade it better. And that's just what the market be doing sometimes. Right. So you got to learn to bail when it makes sense to bail. Right. If price is giving you way too much of a hard time and you're about to lose too much, maybe you have a funded account or a personal account, just get out. The sooner you get out, the better. All right. So this is why with gold, yes, Emmanuel said you're in buy since last week. That's cool, but at what point you got to ask yourself? At what point will you see? Let's say price breaks last Wednesday's low and gives a break and retest. You better not be in that buy then, because ain't no telling how further down it will go. And we're not going to finally make a decision when the market has $20 left on your trading account. That's just not what we're doing here. Okay. For sure, C's. Thank you for jumping on, bro. So we're moving back into US30, aka YM. All right. Price still has potential to make new highs this week. Don't get clapped. Hey, my man. Twan is here. Yeah. So as we can see, the structure for US30, aka YM, is still bullish. But we have fundamentals this week, Mr. Good Afternoon. Don't be surprised if by 2:30 on Wednesday, price continues buying, or don't be surprised if price sells off before it buys. That's why we don't trade FOMC anymore. We just wait and see what happens. And the days after, whether Thursday or Friday, we give it a chance because it most likely will be a better scenario anyway. It'll be a better um, condition for us to analyze and execute. Ain't nobody trading on FOMC, just taking wild chances. If there's something that makes sense, okay, cool. But we don't just anticipate to trade FOMC just because. What else do we have? We have a lot of stocks that are going to um, give out their earnings report. No, Tesla is not one of them. I think they already gave their earnings report. In 94 days, Tesla will report. 24 days, Nvidia will give their report. Apple 4 days. In 4 days, Apple will have its earning report for Q3. Okay. Apple will announce its Q3 earnings on Thursday during a busy week for tech terms as 87% of S&P 500 companies report positive earnings surprises. Surprise. We doing good. So that tells me by Friday, we might see another new high for US 30. Okay. So we just got to be very, very patient and not just get ahead of ourselves in the beginning of the week. Make sense, guys? Let me get your engagement, and then I got something else to say about US 30. Don't worry, I'm not here for long. Okay. So this is a cap. Let me check. So A cap got a gap, but we can see Forex.com doesn't. Uh, Let me check YM real quick. YM has a gap. Has a gap. Hmm. More than likely, we might see it retrace, but we're not counting on it. If we pull up in New York tomorrow and then we see that prices just retesting London lows, we just take our chances on buys. But if they also can't break the highs, the counter trade sell might be the one that plays out better. That's why I'm not really too keen on pushing the narrative. You just wait on better opportunities. Okay. Okay, no problem, bro. Enjoy your workout. Enjoy your workout. All right. So, um, the last time that we had FOMC and interest rates were dropped, let's go ahead and go back to, oh yeah, there it is. Let's go back to what happened that day. All righty. So we went up 230, sold off to London lows and pre-market lows, and they bought instantly. And the next day they retested Wednesday's afternoon lows right here. But by the end of the week, shoot, they were up. By Monday, once again, they gave an opportunity for buys. So that tells you the moment of the 2 p.m. announcement might be volatile per usual, but that doesn't mean that we can't get in conservatively the days after that. And so, which brings me to tell you guys, when you're trading with Liquid Broker, you're trading with some of those brokers that allow you, even with a small account, to open a 0.01, a 0.02 on US30. It helps you to maintain these positions longer, even with a smaller account. You just gotta know that, like, when prices retesting previous day lows, prices retesting 4 hour structure lows, that's an opportunity for you to get in conservatively, moderately as well. And you sit pretty. All right. How many times you guys actually saw the setup, you knew it was coming, but for some reason you wasn't in it for too long? This is your time to speak up. What was the question? How many times have you guys been in certain trades and you felt like you could have stayed a little bit longer and you got frustrated about that? Why didn't you hold a little bit longer? What are some of the reasons why sometimes you didn't hold a really good position a little bit longer? Millions. Millions. Almost had Siri play that by Young Thug. Stop it, Lisa. Speak now, forever hold your peace. Facts.
I didn't trust it.
You didn't trust it. I hear you. But why? Millions and billions. Millions and billions.
It was iffy, man. I don't trust things that are iffy.
I hear you, bro. I hear you. Millions and billions. That guy. That guy right there. Yeah. I hear you. But when you go back and look at the trade, do you often feel like, you know what? Now, I know with futures is different, right? But do you feel like, sure, it was iffy, but if it was off a 4 hour structure, why weren't we holding for like 24 hours?
Them points are different, man, over here, bro.
Yeah,
So,
them ticks are different.
so yeah, man. That's why.
That's true. If the strategy for futures is to just scalp and intraday, then there ain't nothing wrong with that. Ain't nothing wrong with that. I used to scalp, so I wasn't sure what it meant, what it took for it to hold. I was looking for smaller time frames. Okay, that makes sense. That makes sense. And sometimes I don't hold myself, but I know the next day though, if price retraces, I'll still get in. But it'd be some positions when I'm like, damn, if I had just left that conservative position run from the 4 hour structure, I'd definitely been in more profit. So at times I push myself to have that type of position just so that way it can fulfill and go further because it makes sense to hold from a 4 hour structure like that, especially towards the end of the week. Like, for example, a Friday or a Thursday, like when they pull back into them Thursdays, yeah, they be giving them 24-hour setups, you know?
Or other times it could be really bullish on the 4 hour, but on the lower time frames, it's like choppy and you're not sure like where to go in. You know what I'm saying?
Yeah, yeah. That's facts. That's real. That's a reality right there, you know, especially when we're looking after the fact. Good call, bro. I also just self-taught myself micros versus minis, so the drawdown would scare me.
Yep, absolutely.
Talk to us a little bit about that, Twan.
Yeah, so micros are pretty much, um, it's for people with smaller accounts.
Okay.
You know what I mean? So like let's just say, you know, ES goes up about like 5 points.
Yeah.
You'll do like $1.25 times five, and then that will be your points. And then you can like try to like, depending on your account size, where you want, the risk to lie, if that makes sense. Does that make sense?
Yeah. $1.25. That's how much it's worth.
Yeah. So for instance, if you want to put your stop loss 40 points to the downside, you'll do 1.25 times 40. That's $50 that you're willing to risk.
Okay. Yeah. And that's a micro position. Okay.
Yeah. Yeah. Now minis are a different story. That's like if you have like, 500,000. I mean, I'm sorry, like 50,000 or whatever. So, like, let's just say, the same points, right? It's going to be like $12.50 times 50 points. That means you're risking $625 for that move,
I see.
right?
Yeah.
Now let's just say if, you're, I don't know, if the points is like 100 points to the upside, you'll do 1250 times 100. Then that means you're making 1250 for the,
Okay. Yeah. Off that trade.
yeah, off that trade.
Yeah, makes sense. Makes sense. Okay. Yeah, it's not that difficult. The
But that's
mic
just one contract. You're
Yeah.
24, and then you can make thousands.
Yeah, you can't you shouldn't even like double down or double dip. Just that one position, the right entry, and if you're wrong, then you're wrong. Yeah, entry definitely matters now that I'm thinking about it with futures. Like, yeah, I see now more than ever how important entry is. So around what time are you guys entering these trades?
I mean, for me, it's 12, not 12. I'm sorry, 10 a.m.
That makes sense. You don't be getting in the afternoon no more?
Nah. I'm just strictly morning. I feel as though I do better in the morning.
Okay. Bet. Okay. Anybody else who trades futures? Do you guys get in the morning or in the afternoon?
It's funny. I want to get in before the news, but my broker they won't allow you.
Oh, wow. Okay.
But
Are there any brokers that allow you to hold overnight with futures?
No, they all do. They all do. It's just you need enough money. So if you go on the website, it's going to say you need $1,000 to hold one position, and if you
Oh,
and if you and if you have 5 grand, then you can hold 5 contract sizes overnight.
damn. They
Yeah.
hustling dudes out here. What? You gotta pay to hold?
No, like your account size got to be like $1,000.
Oh, in case you get margin call.
Yeah, yeah, $1,000 per contract.
Damn. Yeah. I'll still stay over here for now, but I'm still learning. I'm gonna keep learning. I know I promised y'all that I'll be switching over to that side, just to be able to learn it. But I can see the advantage of Forex versus futures in that aspect. That's crazy. Yeah, and a little ain't nothing for a little swap fee, just to hold a couple days. That's crazy though. Okay, so I can see why intraday and scalping is what most people right now in futures are doing, correct?
Yes, because most people don't have all that guap in their
Right.
account.
Yeah, that makes sense. That makes sense. Okay. Okay. Besides Antoine, I know Lisa trades futures and I know Natish has switched over to futures. Does that make sense for everybody who has switched over to futures? Is that what we're all doing? Using micros? Natish, can you unmute yourself if you're not too preoccupied? What time is it? 7:51. Okay. All right. So, okay, you do trade micro when swinging. Cool. All right. So basically the outlook for US30 is we still bullish. We just gotta wait for a pullback. We do see potential gaps, but I can't see US30 by the end of the week not touching a new high. Like it's really starting to be evident that this is where they're heading. We might touch 48,000 by the end of this week. So we just gotta wait on the higher low and see how price is going to pull back by FOMC. So tomorrow, I definitely will be checking in to see how the market is looking, to see if maybe we get a retracement into this area where Friday afternoon was. All right, it might even be here, 47,323. Whenever it pulls back, I know by New York we'll be able to figure out if there's a reversal to the upside. Um, let's check out GU. GU is still bearish. There's been times I've seen this thing just pull back and spike to the upside, and I'm like, yeah, not interested. The same way EU, I think Thursday when we looked at EU, we saw that it had a potential to sell. It rejected, it bought back again. It's just not much of a to me right now, EU or GU is a little funny. It's lacking liquidity all because of this government shutdown. But I'm sure by FOMC we might see some volume out of EU and GU. But for now, I wouldn't even pay attention to them. I know some of you guys trade UJ. How has that been last week for you? Euro JPY, AU DJPY. I know that's like Richardson's go to. How was last week for you, bro?
It was pretty good.
Nice. That's it.
Yeah, I mean it was pretty good. No loss.
Good, bro. Good, good, good. What's your goal? Are you withdrawing or are you just growing and not pulling out nothing?
I just put $200 last week. It's like almost at 1,000 right now. I'm trying to grow it, but I'm gonna withdraw and then try to get in a bigger position.
Okay, good. I would say pull out 250, man. Put it to the side. At least you know the money that you put in is not it's not, you're just trading with house money if you've grown 200 to 1,000, bro. You know what I mean? You're still muted.
Yeah, I know what you mean. That's like my goal is kind of grow it and then take some of that money and then invest it into crypto.
That's good. Um, I'm glad you said that. It's yes, congratulations, Alice. You just showed up exactly right after I was done with gold. I gotta give you a trophy for that. You're really good at that. Um, it is recorded, so you will catch the replay. The reason why I tell you this, Rich, is how much money do you really need for crypto? If you're making this account your cash cow, withdrawing $100 at a time while you went from 200 to 1,000 is a good strategy, right? Why? Because the goal of trying to just add more positions, larger positions, it does pose a risk of losing the account, which this is not anything I'm preaching. You notice you've done this before. All right. So we got to be careful how we're just thinking, I'm using this account so I could do this and I have this goal. And then you start to add pressure to that account instead of going steady, keeping the same pace, and withdrawing at least 10% out of a 500% growth that you've done with an account. Or else you're never going to reach that goal of what you wanted to do with that account. All right. I'm speaking from experience here. So please think about that. Okay, bro?
Yeah.
Yeah. Um, these are good strategies, guys, to really survive this market. I was very proud of De Jour last week because he took $200 into 3 grand or something like that. And remember, we kept telling him, yo, withdraw, 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 at least some of your gains. So that way, if something happens, you'll know you still had the gains sitting on your bank account or in your wallet. Well, of course, the self-fulfilling prophecy. The account blown. But was he tripping? Nah, he pulled out 2 grand. So now he's made what 500% ROI. Whatever is left is house money. And now he could take 1,000, go invest wherever he wants to, or put into emergency savings or whatever, because he took 200 to 3 grand. All right. It's the same way when the other day, yep, to 2,000. Yes, correct. It's the same way where the other day, like we were catching gold buys. A lot of people were in great profit, but then when the 4 hour structure came in, a lot of money was lost and there was nothing left. I'm trying to get y'all to understand from these experiences, you could learn to do better. It's like, you know what? Damn, next time, now I ain't gonna let it happen like that. I might lose half of the gains, but we're not gonna lose everything because that's still growth and we could still find another opportunity. That's why I stopped trading by Monday night. The last time I took a position was like Friday. Why? Because I'm distancing the days where I'm keeping myself from making mistakes or unnecessary trades to be taken. I want y'all to finish the year by seeing some sort of progress. This year, a lot of you guys, I was really hard on you. I'm like, yo, we're not closing out this year without getting some payouts. Some of y'all got like 3 payouts under your belt. Do you know how happy I am and proud I am? Very proud. Some people are closing out this year blowing way less accounts than they used to when they started trading. That's a W. So some of them little things that y'all still got to work on, write it down. And when you standing in front of, and when you standing in the heat of the moment, when you literally in front of the challenge, right? And you know this is a mistake you've been notorious for making, be aware of it, be accountable about it, and make better decisions. There's a reason why I started this webinar by saying, we got benefits by November 1st that's going to be paused. This is not the season to be blowing accounts. Everything helps. If you can make $186 and replace your SNAP benefits, praise the Lord. Groceries is getting bought off this skill. Medications can be bought off the skill. You could save your own life. So yeah, the markets are very, very like volatile at times, but we need to stop just blaming the market. We just got to learn how to make decisions faster and be more accountable. Can we all agree? All right. That's it for tonight. We will stay connected. I have nothing else to say. All right, guys. Have a great night. Everybody who came late, you will just watch the recorded webinar. When it's available, I will drop it down into Telegram and Discord. All right, guys. Peace, love, and blessings.
Thanks,
No problem.